Hi, welcome to the Market Alert for Thursday the 9th of March 2017. So yesterday the market doing the same thing again. We saw the market open and then move lower, and if you have a look here, we've got exactly the same as Tuesday. The market just breaking below the 20,800 level. I think this is 20,900, just as it did the day before. We'll just drag that across. We'll be able to see it exactly what we had before. This time it came down to it and bounced back off it. As I said before, they don't want this market down in any rush, and we saw the same thing this time. It clipped the scalp line before then moving back to the upside, and we've got a problem here. The market's waiting for Yellen, so we got this sort of down, up, and then it just became narrow through here until it eventually broke here and then moved lower again. But very, very quiet. Again, something that I keep going on about. They're waiting for Yellen to speak on Wednesday next, which is going to be the 15th. And again, I don't need to really remind you about the debt ceiling being reached either. So the market, if we look at the bigger picture, is moving lower. It's also down on the overnight. The 50% extension has been taken out now. Yesterday the market rallied a bit, but now it's been taken out. And what we've got to look at here is this level for the market to find support, 20,815. That 350 points you put on in the 1 day, as I said at the time, up on fresh air, and a case of no new buying really is so far giving the top of the market. Again, we'll need to redraw in the 76% once we get to bottom and the market starts to move back to the upside. So until then, we need to remove this. So the market, there's a bit of volume around here as well, which is indicating that there is some selling around in the market at the moment. Certainly as far as tick volume is concerned, but real volume, we're not seeing an awful lot there. You can see that it's actually quite low. So no major selling there. It just obviously be rapid changes in price to keep the market from falling out of the sky at the moment. On the weekly chart, you can see the volume is sort of tapering off as well. They've offloaded their stocks in anticipation of the 15th as well, as I've spoken about for a long time as well. And if we look at the monthly chart, again, you've got that 2009 where they bought into the market, and now where they're been offloading their stocks. Quite high volumes there. We've got the December, January and February all very high. March so far not a lot. A bit of a spike there where they bought back into the market during 2011 as well, under the Obama administration. On the news front today, what have we got? Let's have a quick look. I don't think there's much out today. ECB press conference at 1:30, bond auction, but nothing at 3 p.m. So again, it's a very similar picture to yesterday. I would expect the market to be sideways, as again we're waiting for the Fed. On the implied volatility, 976, up slightly. You can see this in the chart here. So not a lot to report really. The news is bad and it keeps getting worse. There's all sorts of news in here that is what I would call bad economic news. Also the retail here as well. Urban Outfitters CEO, like housing, the retail bubble has now burst. The auto market has as well in the US, but it's just not being reported. See, riskiest banks are back on again, and Le Pen said she will introduce a new franc at the rate of 1-to-1 to the euro. So going into the future a bit, it's going to get incredibly messy. Also, there's an insolvency problem with the Dallas police pension as well. So it's all bubbling under the surface. It's just not being reported by the mainstream at the moment. Right, on that cheery note, that will do it for today. Let's see what happens during the first hour of the trading session and see how things work out. But don't expect an awful lot as we go into the end of the week, and then obviously next week we'll see what the Fed does, and then it should kick off after that. Right, that's it. Thanks for watching. See you in the next one.